Good afternoon, students. Welcome back to this discussion on audit. So today we plan to start with this new chapter on audit of items of financial statements. This chapter or this topic that we plan to cover, you can say, is an extension of the substantive audit procedures that you have just completed, that you have just understood. Yeah. So in this particular topic, you can say that we are now going to apply all of those audit procedures. Yeah, so that's why, in a way, all of the audit requirements, whether it is about, say, testing of some of the details, or whether it is about applying some of the analytical procedures, or whether this is also about application of any of the procedures in relation to a particular item. All of those things are going to be covered. When we talk about the application, so you should not think that a new thing is going to come up. Yeah, audit procedures are going to remain same. And you can say the audit strategy or the audit approach is going to remain same. Now, we need to be very, very specific to that particular area. Say, for example, if you talk about PPE, so now we need to be very, very specific that in relation to PPE, what is going to be the audit procedure or what are going to be the audit procedures. Okay, all of those audit procedures which would be relevant in relation to PPE, that is something you'll have to think through. That is something you'll have to apply when you go audit something. Okay, so that's the thought process that we have right now. Yeah. So now, when it comes to audit of the financial statements, let's try to understand as to what is it that we are trying to cover. Again, you may find this to be some sort of repetition, but again, very, very important. So what do you mean by audit of financial statements? So we can say it's all about examination of entities' financial statements. Yeah. Means verification, examination, checking, or different terminology we can use. In relation to what? In relation to the financial statements as a whole. And when we are talking about financial statements, we are talking about financial statements as a whole. Means various components which are there. Whether you talk about balance sheet, whether you talk about P&L, cash flow, including the notes to accounts. And in the notes to accounts, what do you have? Disclosures. All of those disclosures requirements you'll have. Correct? And this particular audit, or you can say this examination or this verification of the financial statements, is done by an independent person, or you can say an independent party. Yes or no? So the auditor who does this audit has to be independent. Yeah, so that's the understanding that we have. Yes or no? Now, once this activity is completed, activity means we are talking about the audit procedures. We are talking about various items you'll go check, right? Once that is completed, so what will happen? Auditor will get on to the conclusion and eventually the reporting. Yes or no? So therein, auditor will provide his report. Yeah. Again, this report is something which we are going to cover in greater detail as you move forward. But this report has to be in writing. This report again will have certain criterias every time when the report is required to be drafted. So all of those aspects auditor will have to take care. And while doing this, what is the objective of the audit? What is the objective of the auditor? To get on to a situation wherein the auditor can comment, auditor can opine whether the financial statements which have been verified, okay, so we are talking about these financial statements which have been verified, they reflect a true and fair view or not. Yes or no? Okay, so they should reflect true and fair. Yes. Now, in this relation, when you are saying that audit is all about getting onto the truth and fairness of the financial statements, there's one aspect which is associated with that. And what is that? Reasonable assurance. Yes or no? You all understand about reasonable assurance? Yeah. So I can see some of the participants are around. Can you please help me explaining what is your understanding of this reasonable assurance? Over to you. What do you understand about reasonable assurance? So this is going to be relevant in the context of audit procedures which are planned. So can you tell me what is the meaning of reasonable assurance, which the auditor will always try to look at? Yes, over to you quickly. Anyone who can help me with this? What do you understand about reasonable assurance? Over to you quickly. What do you understand about reasonable assurance? So whenever the auditor will provide his opinion, report, so auditor will get on to the reasonable assurance. So what is the meaning of that? Very good. So Dhanush says it means auditor will not be giving a full assurance. Correct. But what does it imply? Then I think Meera is also saying the same thing, that it's not the absolute assurance. Correct. So now, what does it imply? So when you say absolute assurance will not be provided, full assurance will not be provided, what does it imply? It implies that even though the audit is completed, still there could be certain items, certain areas, or you can say certain aspects in which some of the misstatements may continue to remain. Yes or no? Yeah. Or in other words, we can say that audit doesn't mean 100% verification or 100% checking. Yes or no? Yeah. Because whenever you are talking about absolute assurance means checking something on a 100% basis. Yeah. So that is all about checking on a 100% basis, which is not the case in audit. In case of audit, 100% checking will not be done. So if we say that 100% checking will not be done, so can you tell me what is going to be the audit approach by the auditor in such a case? Quickly, let me just see who can answer this. Great. Tanu, I think Prem, Priyanka, they have also answered. Very good. Yes. Anyone else? Anyone else? Quickly. So if let's suppose 100% checking will not be done, so what is it that the auditor will do? What is it that he will get on to? So what is going to be the audit approach in case 100% testing will not be done? Quickly. Very good. Dhanush says sampling will be done. Almas says sampling will be done. Very good. And I think Prem is saying we'll get on to sufficient appropriate audit evidence, which is correct. But for doing that, what will the auditor do? Auditor will get on to sample testing. Yes or no? Yeah. Now, please understand that some of these points we have been discussing, they are not new. Those are all those concepts, those pointers which you have already covered in greater detail in your previous sessions. The whole idea is to now consider all of those points as to how they are going to get applied in respect of audit of items of financial statements. Okay, so that's the thought process. All right. So now, when it comes to the sample testing, we understood that this is something which is again a very, very important area. Tanu is saying again, sample testing will have to be done. Now, when the financial statements are prepared by the management, okay, So there are certain aspects which the management will consider for recording of a particular item. Yes or no? Now, let's try to think about those aspects. Okay? Now, when the management is preparing the financial statements, so those aspects could be implicit or explicit. Let's try to understand this with the help of an example. Because only when we'll have an example, we'll try to get onto this. Yes or no? Or we'll be able to understand this. Otherwise, it will become very, very difficult. Yeah. So now, let's suppose we are talking about PPE. So when the management will record PPE, or let's suppose any item of PPE in the financial statements. Now, this being an item which will form part of balance sheet. So if the management is recording, let's suppose building. Let's suppose there's a building which has been recorded in the financial statements. Yeah. So it would imply that this building actually exists. Yes or no? Yeah. So if you see a building appearing in the financial statements, what does it imply? That building actually exists. Correct? Yeah. Now, such an existence, what do you call it as? Again, one of the aspects related to the accounting. Okay. Now, similarly, if that building, let's suppose, is appearing, so there must be an amount against it. Yes or no? So this building could be amounting to, say, rupees 5 crore. Yeah. So you may be thinking, but sir, gross block is different, depreciation is different, net block is different. Of course. So we are just talking about the amount at which the building is appearing. So whether it is the carrying amount or the gross amount, that's a separate thought process. So now this 5 crore, the amount at which the building is measured. Yes or no? The building is measured. What do you call it as? Its valuation. Yeah. So that means we have talked about 2 points: existence, valuation. Correct? Now, if the company has got, say, for example, 3 buildings, and if you get to see only one building appearing in the financial statements, is it possible? What do you think so? What do you think? Is it possible that the company actually has got 3 buildings, but in the financial statements, only one building is appearing? Tanu says no, it's not possible. What about others? Quickly. Meera says no. What about others? Yeah. I can see some of the points Priyanka, Shreya, Sejal mentioned. Now, every time when you see an item appearing in the financial statements, there is once again an implied understanding attached to that. And what do you call it as? Completeness. Completeness. Yeah. So now what do you mean by this completeness? Completeness means everything in relation to that particular item is there in the financial statements. It's not missed out. Yeah. So it's complete in all respects. So if there are 3 buildings, 3 buildings are there. If there's one building is there. Then comes the aspect, or you can say an understanding around the cutoff. Now, what does it mean? If there is a building which is purchased, let's say, on 31st of March 2025. So when would this building be appearing in the financial statements? for the financial year 24-25 it will be appearing. If let's suppose two buildings were purchased, one on 31st March, another one let's suppose was purchased on 1st April. Now, the building which was purchased on 1st April, is it possible to record that building in financial year 24-25? Tell me, is it possible? Is it possible? Tanu says no, Vishal says no. Why is it not possible? Because it belongs to some other reporting period. Correct? Now, this is what you call as cutoff. Means you will draw a line. So let's suppose your line is drawn on 31st of March. That is where you draw the line. Yeah. Now, on this line which you draw on 31st March, anything up to 31st March will be considered during financial year 24-25. Anything which goes after 31st March in relation to such type of transactions or the balances will not be appearing in 24-25. So when would they appear? They would appear in the reporting year to which they belong to. Yes or no? So they would be appearing in the next reporting year or next financial year. Correct? Now this is what you call as cutoff. Okay. Yeah. So this is about the cutoff. Now we are all discussing some of the aspects which you will consider in relation to financial statements. Okay, please remember that. Next, if the building is appearing in the financial statements, so once again, there will be an implied understanding. What will be that? That if there is an asset, building is an asset. So if there is an asset in the financial statements, company has got a right towards that asset. So who has the right in relation to that asset? It's the company. And if it's a liability, then who has the obligation in respect of that liability? Company. Yeah. So this is again one of the implied understanding you can say is associated with an item in the balance sheet. Now, if let's suppose any item is recorded in the books of accounts. So while preparing the financial statements, can you just write building at any place? Can you just write inventory at any place? The answer is no. Why? Because there's a proper structure. There's a proper format of the financial statements which every entity is required to follow. Yes or no? Which every entity is required to follow. That is what you call as presentation requirements. And along with the presentation requirements in relation to every area, every item, there are certain disclosure requirements. Yeah. For example, if you talk about PPE, which accounting standard covers PPE? Can you tell me? Can you tell me which accounting standard covers PPE? Over to you. Great. Vishal, Almas, Tanu, Rihanna, they are saying AS10. Very good. Meera is also saying AS10. Now, if you look at AS10, AS10 prescribes some disclosure requirements. Yes or no? So if you are looking at the financial statements, you will presume that the disclosure requirements in relation to AS10 for the building would have been disclosed by the company. And the presentation requirements would be there as per the requirements of Schedule 3 to the Companies Act. Yes or no? Yeah. So that is as per the requirements of Schedule 3 to the Companies Act. Yeah. So now, this aspect is also something which you'll always presume. Yes or no? So every time you see an item appearing in the financial statements, and we have just discussed about the balance sheet. So in a way, management would have taken care of all of these aspects. 1, 2, 3, 4, 5, 6. Now, these points which we have discussed are technically termed as assertions. Okay, so these are called as assertions. Now, how is this assertion or all of these points relevant to us? So let's come back to audit now. Okay, so let's come back to audit now. If let's suppose you happen to be the auditor of a company or any entity, so what will you do? You will have to ensure that your audit procedures are taking care of all of these aspects related to PP. If you just check the amount at which building is appearing and you ignore every other thing, so in a way, what did you check? Only the valuation assertion. Only the valuation assertion, wherein you have ignored every other aspect. Sometimes you may say that, sir, by checking the valuation assertion, if we are also able to check, let's suppose, another assertion, means the same procedure covers two assertions. So that is fine. There is absolutely no problem in that. And is it possible? The answer is yes. Sometimes it may be possible. But it's not about whether you are performing one procedure, two procedure, or three procedure, or 4, 5, 10. Important thing is that all of your audit procedures should be one which give you reasonable assurance that you have obtained sufficient appropriate audit evidence. And in the context of assertions, you should make sure as an auditor that you have taken care of all of these assertions. Okay, you have taken care of all of these assertions. Clear? Everyone clear so far? Any questions, any doubts? If you have, please let me know. Let me just also look at your queries. Okay, any questions, any doubts? I can see one query coming from Sejal. Sejal is asking, sir, title deed and its valuation will be checked as evidence for surety that the building is actually owned by the company. Yes, that's correct. Or you can say that's one of the procedures. Okay. And I would say this will be more relevant to rights and obligations assertion, because through the title deed, what do you get? You get the right towards that aspect. Correct? Yeah. So in a way, if you look at the title deed, if you verify the title deed, so which assertion you are trying to cover? You are trying to cover assertion related to rights and obligations. Okay, clear? All right, so let me just come back and look at your queries. I think you don't have any other queries. So Tanu is saying all clear. Very good. Meera is also saying all clear. No questions so far? No doubts? Sure? Yeah? Everyone clear so far? All right, great. So let's move further. Now, moving further. See, just now, some of these aspects that we discussed, they were in relation to the balance sheet. Now, can we say that all of these aspects or all of these assertions which an auditor will go check in relation to the balance sheet will also be the same for the items of P&L? Or in simple terms, can we say that the assertions for the balance sheet or the items of the balance sheet will also be similar for the assertions of items of P&L? The answer is no. Let's try to understand as to why it is no. Okay. So for the P&L, we can pick up very important item, and that is what you call as sales. Okay. Yeah. All right. So now if you talk about sales, let's suppose company has recorded a sale of rupees 190 crore. Okay, let's suppose this is the amount of sales which the company has recorded in its financial statements. Now, in relation to this amount, as an auditor or as the management, first of all, you would have ensured that this amount is correct. Means if the sales are measured at 190, means this measurement is correct. Yeah. Now this measurement aspect or this amount at which the item of P&L is appearing, what do you call this assertion under P&L items? As measurement. When you go to balance sheet, you don't call it as measurement, you call it as valuation. Okay. Yeah. Now, as regards sales, you need to ensure that if it's the financial year 24-25, then all the sales related to 24-25 are completed. Means they have been appropriately captured. Yes or no? Yeah. Similarly, you will also ensure that during this financial year 24-25, just a minute. During this financial year 24-25, no sales belonging to the period 25-26 are appearing. Yeah. So once again, you will have to draw the cutoff. What will be this cutoff? 31st March 2025. Yeah. So for the reporting period, you will have a cutoff. You will have a cutoff. Understood? Yeah. So you'll have a cutoff. So every time you'll have to go with that cutoff. You'll have to follow that cutoff. Clear? Yeah. So we can say cutoff is another assertion which you get to see in case of P&L. Next, similar to what you see in case of balance sheet, P&L will also have a presentation criteria. P&L items will also have some disclosure requirements. Yes or no? Yeah. So both these things will be there in respect of P&L items. Correct? Yeah. So these items in relation to their presentation and disclosure. This is also an assertion. So we have this assertion related to presentation and disclosure for P&L items also. Yeah. So we can say completeness is same, cutoff is same, presentation and disclosure is same. Measurement is also same, but the name is different because over there you call it as valuation, over here you call it as measurement. Then comes occurrence. Now, what do you mean by occurrence? Now, if let's suppose there is a sale, okay, this sale pertains to, say for example, 24-25. Yeah. And that sale is already forming part of this 190 crore. Okay, let's suppose from this 190 crore, we pick up a sale invoice of 1 crore. Now, all of these sales which are adding up to rupees 190 crore, we need to ensure whether such sales have taken place during the year or not. Yes or no? Yeah. So we need to ensure. We need to ensure. For ensuring whether such sales or such sales transactions have taken place during the year or not, as an auditor, you will apply some procedures. Yeah. When you apply those procedures through which you try to check whether the sales have occurred during the year or not, then in a way, which assertion you are trying to check? Occurrence. Occurrence. Now, there's one assertion which is there in case of balance sheet item, rights and obligations. Rights and obligations. Now, tell me one thing. For P&L items, do you think this aspect of rights and obligation makes any sense? What are your thoughts? Do you think for P&L items, you should go and check whether the management has a right over that P&L item or not, whether the management has an obligation in relation to that P&L item or not? Tell me. Tell me. Do you think? Tanu says yes. It makes sense. Shifa says no. Can you please help me understand why you're saying yes and why no? Over to you quickly, Tanu, Shifa. And what about others? Quickly. Yes. Can you please elaborate why you're saying yes, why you're saying no? Over to you quickly. Meera says no, as it ascertains the profit or loss. Almaz says no, as it is related to expenses and income. So it's not about any asset or a liability. For a P&L items, will you establish any right? No. Where do you get the right? That is in respect of assets. And where do you have the obligation? That is in respect of liabilities. For P&L items, will you have any right or obligation? The answer is no. Okay. Yeah. So this is not relevant at all in the context of items of profit and loss. Understood? Understood. This is not relevant at all in the context of items of profit and loss. Yeah. So that's why which assertions you will have in relation to P&L? Occurrence, completeness, cutoff, measurement, and presentation and disclosures. Okay, so these are the assertions you will have. Clear? All right, so now I think what we should do is we should try to design an audit procedure which can take care of each of these assertions in relation to sales, through which I think we will get some more clarity. Yes or no? Yeah. Now tell me one thing. Now please remember our area to audit is sales. Okay, so we are talking about sales only. Now, can you tell me an audit procedure which you will want to apply for checking assertion related to occurrence? Over to you. For checking this assertion related to occurrence, can you help me with any one audit procedure? So how do you verify through an audit procedure as regards the occurrence? Okay, Prem says we can go and check the sales invoice. Rihanna says we can make the inquiry. So what do you mean by inquiry? So how does this inquiry help you? Can you please elaborate? Yeah, it's important that you put down the complete procedure. Huh? Tanu says voucher of sales, we can check. But in a voucher, what will you check? Because in a voucher, all the things that you will get to see will be about the accounting entry only. So how will you establish whether the sales have occurred during the year or not? Rihanna says we can inquire with the parties who are handling sales, means the sales team. Okay. Prem says we can obtain external confirmation from the debtors. Correct. See, if you have to check the occurrence, so for occurrence, what will you check? First of all, sales invoice. Yeah, sales invoice is what you will check first of all. Of course, you can always obtain confirmation from the counterparty, which is also called as external confirmation. You can always ask for that. That will also help establish this. But we are talking about a particular transaction, not the outstanding balance. Yeah. So if you go and check with the third party, you will be talking about that specific transaction, not the outstanding balance. Okay. So that is something you need to remember. Through which again you can check the asset occurrence. Yeah. Sunil is saying we can go check the inventory. No, so I think if you just simply go and check the inventory, so now we are talking about a sale which has occurred during the year. So if the sale has occurred, you will not have inventory in relation to that. Yes or no? So how does this procedure help you? I don't think that will be the appropriate procedure, because when the inventory is gone out, either you can say I'll just check as to which item was sold and to whom it was sold, and you will check the complete dispatch details. Okay, means whoever was responsible for that. Something I think which Meera is also trying to explain, go through the sales strategy, but you need to be specific in terms of the audit procedure. Okay, you can't be giving this generic response that we'll look at the sales strategy, because in respect of the sales strategy, what is your audit procedure? Just to understand that, that doesn't help you check the occurrence. Okay, great. So Rihanna says we can go check the sales invoice and the transaction. Yes, of course. Yeah. Okay, good. So now, one of the aspect we have just tried to apply the procedure also. Okay, so for the occurrence, we have looked at the procedure. For completeness, can you tell me what will be the audit procedure for completeness? How do you ensure completeness of sales? How do you ensure completeness of sales? Tell me. So if let's suppose completeness is required to be checked, how will you go check that? Okay, Sunil says we can check the GST portal, that all the sales which are recorded in the GST portal, are those also appearing in the books of accounts? So I think you are talking about the reconciliation. Yes or no? So of course you can do that. But what if there's a sale transaction which has neither been recorded in books of accounts and nor recorded in the GST portal? So how do you ensure completeness then? Tell me. Jayendra says BRS. The BRS is about checking the banks. So when you are talking about bank reconciliation statement, so with the help of bank reconciliation statement, you will be able to check the reconciliation of a bank. You will not be able to do that for sales. Mira says check the inventory. So how do you get to know the completeness by checking the inventory? I couldn't understand. Tanu is saying inquiry. See, inquiry you can't just keep doing for every item. Huh? You can't just keep saying that I'll inquire, I'll inquire, I'll inquire. No, that doesn't work. You need to frame a proper audit procedure in relation to its audit. Okay. Inquiry, of course. I'm not saying it's not an audit procedure, but you need to consider the more appropriate audit procedure. Because if let's suppose you inquire, management confirms, then what? And still, if let's suppose that has not taken place, okay, so you need to go check some of the underlying documents at least. Yes or no? So that is something you'll always want to do that. Yeah. So now, as regards the completeness, what will you do? So I think one of the audit procedure which you can always perform is analytical procedure. Through the analytical procedure, you can just try to check, number one, as to how the sales have behaved during the year and do they appear to be recorded completely or not. Third, you can always go and check the production record and the production movement. If let's suppose during the year you had this opening balance of 100, 50 units were produced, yeah, and 100 were sold. So your closing balance has to be 50. Yeah, so through your production record, the quantities which have been consumed, those should have been sold. Yeah, so your sales quantity data should match with the outflow which is appearing in the production records. Yes or no? Yeah. So that is again one of the procedures you can consider. Right. Now, moving on to the next procedure or next area, that is around cutoff. So how do you check cutoff? Over to you. So if let's suppose you were to check cutoff in relation to sales, how will you check that? Tell me, how will you check the cutoff? Over to you, quickly. How will you go and check the cutoff? Over to you. I think I missed some responses from Sejal. Okay, she was talking about test of details, right? Shreya was talking about vouching. Fine. Now, can you tell me the audit procedure that you will have for cutoff? Yes, quickly. For ensuring cutoff in relation to sales, what is going to be your audit procedure? What audit procedure you will perform? Okay, so Shreya says check the bank statement. Okay, Priyanka says external confirmation. Jesus says checking the invoice. All right. Anyone else? Anyone else? So how do you check the cutoff? I think Vishal was saying check the invoice. Okay. Prem says inspection of sales invoices at the beginning and the end of the year. Very good. Almas says inspection of records. So let's try to understand this. See, the whole idea of discussing all of these audit procedures is what? That you need to understand that there's one aspect you are trying to check. Okay. So specifically in relation to that particular aspect, you need to apply the audit procedure. So we are not just checking the amount of sales. We are checking whether the sales belong to the correct reporting period or not. Yeah, so that's the testing. So what you can do is you can pick up the last 5 invoices. Pick up the last 5 invoices which have been issued during the year and check where they have been recorded during 31st March, during 24-25 or not. So no, it should not happen that some of the invoices of 24-25 have been booked in next financial year. Similarly, what you should do is first 5 invoices you can pick up for 25-26. Okay, so first 5 invoices. You can pick up for next financial year. And when you do that, when you pick up those next financial year, first 5 invoices, there again, what do you need to check? That these 5 invoices should have been recorded in 25-26. None of these invoices should be recorded in 24-25. Correct? Yeah. So that is how you are ensuring the cutoff. Over here, what is the objective? That the sales belonging to 24-25 should be recorded in 24-25. That should not go to 25-26. And the sales which are appearing in 25-26, that should belong to 25-26. That should not belong to 24-25. Yeah, means the sales should not be pushed to the next financial year, should not have been preponed in the current financial year. Yeah, so this pushing of sales to the next financial year, that's a risk. Preponing of sales to the current financial year, that is also a risk. So idea is to take care of these two risks through cutoff testing. Yeah, so very popularly, this is called as cutoff testing. Okay, everyone clear? Yeah, everyone clear? So I'm just hoping that you have the clarity of these assertions now. Important part is to understand the meaning of assertion. Yes or no? Yeah. Neil says checking notes. What do you mean by checking notes? I can't understand. Yes, over to you. Everyone clear? Any questions? Any doubts so far? Yeah. Okay, great. So Rihanna says yes, clear. What about others? Okay, now moving further. I think next two are very simple for you to structure the audit procedures. For measurement in relation to sales, what will be your audit procedure? So how will you check this measurement? Tell me, I think this is quite simple now. How do you check measurement in relation to sales? Meera says check the sales transactions. Okay, but how do you check the sales transactions? What do you mean by checking of sales transactions? Yes, anyone else? So how will you ensure the measurement? Saroj is saying audit strategy. What do you mean by audit strategy? See, all of these responses wherein you are saying, I'll check the sales transactions, I'll get onto the audit strategy, I'll perform inquiries. They are very generic. They are vague. That will not get you marks. Okay, you need to be very specific in terms of your audit procedure. Okay, yeah, clear. So now I think Tanu is saying we can check the invoice. Very good. Very simple procedure. So how do you check the amount of the sale is correct or not? Go and verify the sales invoice. Yes or no? So what should be your audit procedure? Examination of sales invoice. Simple. Yes or no? Yeah? Clear? Next, presentation and disclosure. So how will you ensure presentation and disclosure in respect of sales? Again, a very simple one, but let me see who can answer this correctly. Don't give me just generic things or the vague answers. Try to be very, very specific to the assertion. Your procedure has to be specific to the assertion. Huh? I'm not talking about any procedure on sales testing. I'm talking about any procedure on sales which will take care of this assertion, presentation, and disclosure. Yes, quickly. What audit procedure you will perform to take care of this assertion? Over to you, quickly. Tanu says notes to accounts. Here again, what do you mean by notes to accounts? Sunil says sales account will be checked. What do you mean by sales account will be checked? So how does it help ensure presentation requirements are correct or not? Disclosure requirements are completed or not and correct or not? So what should be the right procedure? Yes, think about it. What will be the appropriate procedure in this case? Yes, quickly. Just think about it. What will be the right procedure in this case? Over to you, quickly. Tell me quickly. Very good. Prem says presentation made under the requirements of Schedule 3. We can go check that. Sunil says we can apply the criterias. We can check the criterias which are prescribed by accounting standards. Great. Sejal says checking the balance sheet and notes to accounts. What accounting policies are chosen? Again, that's correct. Then the accounting policies which are chosen, okay, as to whether they are appropriate or not. Correct. See, in this case, when it comes to presentation and disclosure, we have already discussed this point. Where does this presentation requirement come from? Accounting standards and Schedule 3. Correct. Where do you get these disclosure requirements from? Accounting standards. So what is going to be the appropriate procedure for this? For this assertion, the appropriate procedure will be to check whether the presentation criteria is as per the requirements of Schedule 3 or not. Yeah. So we'll go check the requirement which is prescribed by Schedule 3, compare that with the one which is appearing in the financial statements. If that is all right, then it's good. Similarly, you'll check what all disclosures should be given in respect of sales as per AS9, or if there is anything specifically required by any law or regulation. If that has been appropriately covered, yeah, so we'll say, yeah, this disclosure is appropriate. Okay, clear on this? Yeah, everyone clear? Any questions, any doubts so far? Please let me know. Any questions, any doubts so far? If you have, please let me know. Yes, quickly. Any questions, any doubts if you have? No? All clear? So what we will do is, we'll just try to look at some more items and the assertions around that. Yeah, so what I'll do is I'll just take you to your study material. So if you want, you can also open your study material. Huh? Okay, so I'll just pick up this extract. Okay, that is about the P&L items. Now, if let's suppose we are talking about employee benefit expenses, means the employee cost and the sales. Now, in this case, if the assertion is occurrence, if the assertion is occurrence, what does it imply? It implies that the transactions recorded in the financial statements have occurred during the year and relate to the entity. Yeah. Now, in relation to employee cost, what will you do? Employee cost has been incurred during the period in respect of personnel employed by the entity. Yeah, so this is what it implies. Employee benefit expense does not include any cost of unauthorized personnel. Unauthorized personnel means only the cost which is related to the employees of the entity should have been recorded. Yes or no? Yes or no? So that's the meaning, or that is the understanding you will obtain. Correct? Yeah. For sales, I think we have discussed it, but what does it imply? It will imply that recorded sales represent goods which were ordered by valid customers and were dispatched and invoiced in the reporting period. So you can just take an example of 24-25 as the reporting period. Let's assume our reporting period is what? 24-25. Okay. Yeah. So we can assume that. Correct. Now, when it comes to completeness, now what does it imply? Completeness. All transactions that were supposed to be recorded have been recognized in the financial statements. Transactions have not been omitted. See, at one place you are checking whether your transaction occurred during the year or not. Now you are saying all of your transactions which have occurred during the year, they have been recorded. So that's how you are ensuring completeness. That's how you are ensuring completeness. Now, in relation to employee, what does it imply? Employee benefit expenses in respect of all personnel. Now, this is important point because you are talking about completeness here. So that's why you're talking about all the employees. Yeah, means the cost for all the employees have been accounted for. If you check that, what does it mean? You are checking completeness. Okay. Similarly, for sales, what does it mean? All the sales have been recorded during the year. Here again, why are we calling it as all? Because we need to ensure completeness. Correct? You will not be transactional in this particular assertion. Please remember. Because you have to talk about the complete population. Understood? Yeah. So you are not checking any sample. It's not about picking any sample or checking any sample. It's about ensuring that your population is 100%. Okay? Yeah. Now, if let's suppose we talk about cutoff. So what do you mean by cutoff? Let's try to understand this. Whether all the income and expenses are reported in the correct accounting period means one belonging to 24-25 is recorded in 24-25 and not pushed to next year. Transaction which belongs to 25-26 means the next year has not been preponed to current year. That is cut off for you. Yeah. So for employees, what does it mean? Means the employee cost. What does it mean? Employee benefit expenses recognized during the period related to current financial period only. Okay. Means during 24-25, no expense pertaining to 25-26 has been captured. Yeah. For sales, I think we have already discussed this. Measurement. I think this is fairly simple, easy to understand, but still let's look at this. Now measurement means verification of the amount. Means the amount at which the item has been recorded. Yes or no? So in a way you are checking the accuracy of the amount. So that's the context here. What are you trying to check? Accuracy of the amount. You are not checking completeness. You are not checking cutoff. You are not checking whether it has occurred or not. You are checking that whatever is recorded at the correct amount or not. And you are also transactional here. It's not about ensuring completeness because that is something you will do in completeness assertion. Now, for a particular transaction which has been recorded, what are you checking? Whether that particular transaction is appearing at the right amount or not. Okay, so that's the thought process. Yeah. Now, for this, what do you check? Employee benefit expense has been measured or calculated accurately because it's all about accuracy. Yes or no? It's all about accuracy. Now, there could be some tax deductions related to employee. There could be some deductions, etc. Or there could be some components which may not form part of cost. You need to ensure that all of these things are not impacting the employee cost. Means the employee cost should be appearing at the right amount. Correct? And I think same is the understanding for sales. Okay. Now, next. Presentation and disclosure. Now, presentation and disclosure, again, we understand what does it mean. When it comes to the presentation and disclosure, two things will become very, very important. Please remember, two things will become very, very important. One is about the schedule 3 and second will be about accounting standard, or you can say the relevant accounting standard. So therefore, in this case, you will have a slightly difficult sort of task to do. Now, this is very, very important. Now, please remember, and I'll come to those points also. If let's suppose you have a question which requires you to design a transaction or design, let's suppose, a procedure to check what presentation and disclosure, let's suppose, of employee cost. Now for this, till the time you don't have the clarity as to what schedule 3 requires, you don't have the clarity, or you are not aware of the disclosure requirements which are there in AS 15, will you be able to apply that audit procedure? Tell me. What do you think? Will you be able to apply that audit procedure? Tell me quickly. What do you think? Over to you quickly. What do you think? Tanu says no. So that means even though we are checking audit here, you will require knowledge of accounting standard as well as legal regulation. Yeah. So whatever relevant regulation will apply, you need to be aware of that. You need to have knowledge of that. If you don't have that knowledge, you will not be able to apply this audit procedure. Yeah. So let's try to understand as to what is that knowledge that you need to consider. Though we are going to discuss this in more detail about each and every item of financial statement, but still, let's talk about employee cost. Employee cost is required to be shown with this particular breakup. So every time you will record an item on the face of the profit and loss, there will be a single line item. Employee benefits expenses. But for this employee benefits expenses, a breakup into these components means what component is salary and wages, what component is contribution to provident and other funds, what component is any ESOP expense, and what component is the staff welfare. Okay, so these are the breakup, or you can say components of this cost, which you need to present in relation to the employee cost. Right? Yeah. So this becomes important. Now, if let's suppose you were to apply an audit procedure or you were to explain an audit procedure, what will you need? You will need this understanding. Only then you will be able to design the audit procedure. Otherwise, you will write a generic line. What is going to be your generic audit procedure? That ensure compliance with the requirements of Schedule 3. Yeah. So if let's suppose at the end you don't remember this, then of course you can go consider that. You can go write that, but that is considered to be quite generic. See, the more specific you will be, the better will be the marks. Understood? Yeah. So every time you can't be generic in terms of your responses, in terms of your solution. Understood? Similarly, let's look at sales. Okay. So now in respect of company other than finance company, revenue from operations. Every time if you look at the P&L, revenue from operations will be a separate line item in the P&L. Yes or no? And in the notes to accounts for that revenue from operations, you will have a breakup. Something like this. You will have a breakup, something like this, which will detail out the components related to this. Yes or no? Yeah. So all of these things again become important. So if you will design an audit procedure, you'll have to have an understanding of these things. Clear? Clear? So I think similar sort of discussion we can do in respect of balance sheet items also. But before that, I think we can take a break. Yeah. So I think you must be waiting for the break. But before we go for the break, if you have any questions, any doubts, please let me know. Any question, any doubt, if you have, please let me know. Then we'll take a break. No questions? Everyone clear? Okay, great. Tanu is clear. Anyone else? No questions? Sure. Okay, so I think Sejal has got a couple of queries. Let me just look at that. I think these were pertaining to some other pointers, but still, let me just check. So all these points which we have studied, we need to tell the audit procedures. And as you said, they are vague, so we need to tell what will we do, like checking invoices. Yes, that is very important. Okay, the more specific you will be, the better marks you will get. And I think she had tried to explain then checking invoices, or like what we will do in that case, we need to tell. Is it right? Yes. Yes, of course. Yeah. So that is something you'll have to be clear. You have to be specific. So the important point is you have to be specific. Yes, Dhanush, what is your query? Yeah, Dhanush, please go ahead with your query. So as we'll move further, we'll pick up all the items of the financial statements, balance sheet, P&L. And for each item, we'll design the audit procedures. And while designing the audit procedures, we'll keep linking them with various assertions. Understood? So now our approach will be what? Not only to think about the audit procedure, but also to think audit procedure considering the relevant assertion. Okay. Dhanush is asking, sir, in calculating sales, what we choose as a medium to identify exact sales. So I think if you are asking me in the context of the amount, or maybe whatever understanding I could draw from your query, I think sales invoice will be the appropriate document to be checked for that. So if you look at the sales invoice, that should take care of these points. Okay. Yeah. Clear, Dhanush? Any more questions? No? Then I think we can break now. Yeah? Great. Okay. Dhanush is clear. Then I think we can take a break. Yeah? So let's continue. We are not yet done. So in a similar way, like we did this for P&L, we'll discuss this for balance sheet. And then of course, we'll pick up some more examples around it. Okay. And then eventually we'll start picking up each and every line item in the financial statement, balance sheet, P&L, all of them. And we'll keep structuring the audit procedures down there. Fine. Yeah. So let's take a break and let's meet after the break. Huh? So we'll meet after 15 minutes. Yeah. Sure. Hi. So let's continue with our discussion. So we have discussed some of the examples, and we have also tried to understand as to in relation to those examples which were pertaining to P&L items. What were the meaning in relation to that particular specific assertion? Okay. Yeah. So now similar sort of exercise will do that for balance sheet items. I think Pawan has a query. Yes, Pawan. Yes, Pawan, please go ahead. What's your query? No? All right. So if you have any query, you can also feel free to write. Okay. All right. So now, when it comes to the balance sheet, if you remember, our assertions were more, and there was one more assertion which was not there in P&L. Do you remember which one was that? One assertion which is not there in P&L, but you have in case of balance sheet. Can you tell me which one is that? Great. Almas says rights and obligations. Yeah. Okay. So now, existence. Existence means for a particular asset, we need to check whether it exists or not. Okay. For example, inventory. So if we have to talk about inventory, we need to check. We need to check whether that inventory physically exists or not. Yes or no? Yeah. So that's the checking you'll need to do. Now, for doing this checking, what will you do? Some audit procedures you'll have to apply. Yeah. So currently we are not talking about those audit procedures. We're just trying to understand what does it mean? What does it imply? Similarly, if you talk about completeness, it means all the assets, liabilities, and the balances of equity are fully recorded in the balance sheet. Means all those which should have been recorded in the balance sheet are there in the balance sheet. Yeah, none of them is missed out. Okay. In the context of inventory, what does it imply? So let's understand this. All inventory units held by the entity that should have been recorded have been recognized appropriately in the financial statements. Any inventory held by a third party on behalf of the entity, to whom does it belong to? Tell me, if there is any inventory which is physically lying with a third party, okay, but it belongs to the entity. So can you tell me who should record that in its books of accounts? Third party or the entity? What do you think? Very good. Tanu says entity. Prem says entity. Almas says entity. So that means for you to ensure completeness, if there is any such inventory which is not physically there with the entity, but which is physically lying somewhere else, what do you need to check? Whether it belongs to the company or not. Of course, you will check the rights and obligations around that. And if that is the case, you need to include that. Once you include that, that becomes complete. Yeah, I think Saroj had the same answer. Great. Cutoff. Cutoff means ensuring whether the item has been reported in the correct period or not. So it's all about ensuring that the item is reported in the correct period. If let's suppose our reporting year is 24-25. So in such a case, what do we need to ensure? We need to ensure that it's appearing in 24-25. It should not either be preponed nor should be pushed or postponed to the next year. For example, if you talk about inventory balance as at the year end, okay, means inventory balance which is there as on 31st March 2025. It does not include any inventory which is belonging to 25-26. Any inventory which is belonging to 23-24. Of course, opening balance is there, but anything which has been consumed in the previous year, it's not moved to the next year. Clear? Valuation. I think valuation is a very simple aspect. Valuation means all the assets, liabilities, equity items, they have been recorded at the correct amount. Means over the amount, accuracy needs to be ensured. Yeah. So it's all about accuracy of the amount. Nothing should be understated in terms of the amount or overstated in terms of the amount. So now, how do you measure inventory? You'll go check the requirements of AS2. AS2 says that the inventory should be measured at lower of these two. Cost or NRV. Yes or no? Yeah. Cost or NRV, whichever is lower. So if this mechanism has been followed by the company appropriately, cost or NRV, whichever is lower, then there is absolutely no problem. Then it is perfectly fine. Okay. Why? Because our intent is what? Our intent is move to the right amount, accurate amount in relation to inventory. Okay. Now, as regards the cost, so this is what we talked about, cost or NRV comparison, which AS2 requires. But for the cost, means what should form part of cost of an inventory? For that, again, there is a proper guidance which is given in AS2. Yeah. So how do you determine the cost of inventory? You have a detailed criteria. You have proper guidance for that. So you'll consider that criteria, okay, for valuation of items of inventory as far as their cost model is concerned. Okay. Yeah. Now, rights and obligations, as we discussed, that rights will be there in respect of assets, obligations will be there in respect of liabilities. So every time there is an asset which is appearing in the balance sheet, what does it imply? Entity has the ownership, and legal title towards that asset. And every time there is a liability, what does it imply? Entity has an obligation to pay that amount. Entity has an obligation to pay that amount. Okay. Now, every time for any asset or a liability, this aspect is also required to be looked at. For example, any inventory held by the entity on behalf of another entity. Means if let's suppose entity happens to be a third party. So inventory is physically there with the entity, but its right do not belong to the entity. Let's suppose they belong to a third party. So who should record that inventory? Tell me. Who should they record that inventory in such a case? Over to you. Tell me, who should record that inventory in such a case? Very good. Julie says it should be third party and not the entity. Almaz has the same answer. It should be recorded by third party and not the entity. Why? Because the right of that asset is not there with the entity. Just by having an asset physically doesn't mean you have the right. Yes or no? Doesn't mean you have the right toward that. Okay? Now, moving further. Presentation and disclosures. This I think we have discussed quite a lot. So now here again, because it's about ensuring that the criterias of schedule 3 have been taken care of, disclosure requirements of the relevant accounting standard have been taken care of. What do we need to check? We need to check for the inventory what is going to be the presentation criteria. So we understand that the inventory needs to be broken into these components. Okay. Further, there could be some goods in transit. They need to be specified separately. Mode of valuation needs to be disclosed. Right? Mode of valuation needs to be disclosed. Now, till the time you don't actually go and look at Schedule 3's requirement, so you will find that you will not be able to apply this audit procedure. Or you can say write down this audit procedure in a specific manner. Yeah, so this is one area over which you will have to have that clarity of Schedule 3. Okay, yeah. So it's all about having the clarity of accounting requirement. Yeah, so please understand that in case of audit, in a way, what is it that you are required to check? Accounting requirement. Yeah. And when we'll discuss of this point before we move further. Okay. So now let's look at this question and you need to answer this. A company is engaged in manufacturing of fabrics from yarn purchased from different suppliers. Occasionally, it also manufactures fabrics tailor-made in accordance with the requirements of certain mills from yarn received from those mills. Company raises bill of its labor charges only on mills for converting yarn into fabrics. Auditor of the company tries to ensure that stocks of the company as at the year end do not include stocks pertaining to these mills. Which assertion auditor is trying to verify in this particular situation? And how can he ensure that? Understood? Understood, everyone? Yeah? So there are a couple of questions. Which assertion you think is getting tested? And how will that be tested? Over to you, quickly. Over to you, quickly. Okay, Prem says cutoff. Julie says rights and obligations. Okay, what about others? Quickly, yeah. Jendra says completeness. What about others? Tell me quickly. Yes. Quickly, huh? Almaz says rights and obligation. Dhanush says existence and rights and obligations. Okay. What about others? Yes, quickly. Everyone, please try to get on to those assertions. I think we have discussed that quite a lot. Huh? You understand that it's all about checking that particular aspect. Quickly. Yes. Anyone else? No. All right. So let's try to understand this. Okay, I can see one more response coming up. Okay, great. Rihanna says existence, valuation, rights, and obligations. Okay, so three assertions. No worries. So now in this case, okay, if you look at the situation, company is engaged in the business of manufacturing of fabrics from yarn purchased from different suppliers. Okay, so yarn is the raw material from which fabric will be manufactured. Okay, but occasionally company is manufacturing this fabric which is tailor made in accordance with the requirements of certain mills from yarn received from those mills. Means the customer will send the yarn. Please understand, a customer will send the yarn and will ask the entity that use this yarn, manufacture the fabric and give it to me. Is that the case? Yes or no? That's how it will work. In which case, what is the role of the company? Just to manufacture. Means the labor charges will be there. Why? Because material cost doesn't belong to the company. Material is coming from the customer itself. Yes or no? Material is coming from the customer itself. Company is only applying some cost. Okay, so there will be a labor charge. So company therefore raises bill of its labor charges only in respect of this occasional manufacturing. Means when the material is received from the customer. Fair enough. Yeah. Now in this case, auditor tries to ensure that the stock of the company at the year end doesn't include stock pertaining to those mills. Okay. So at the year end, what will happen? Company will have three things in its stock. One, yarn purchased from different suppliers. Second, yarn received from the customers. Third, fabric, which is manufactured and unsold. Yes or no? Now, in this case, yarn which is belonging to the customer, can we say this is the one which belongs to the entity? Tell me, can we say that the yarn which is coming from the customer, it belongs to the company? The answer is no. So therefore, at the year end, what is it that the auditor will have to do? Auditor will have to segregate that. Why? Because on that yarn which is belonging to the customer, right of entity doesn't exist. Right of the entity doesn't exist. Yes or no? On the yarn which is purchased by the entity, on the fabric which is manufactured by the entity, using that yarn which is purchased by the entity, right is that of the company. But the yarn which is received from the customer, entity is only holding that on behalf of the customer. Entity doesn't have any right over that. Okay. So therefore, which assertion should be considered in this case? Rights and obligations. And also think about the other assertions. Can we say that valuation should be considered? No, irrelevant. Can we say presentation and disclosure? No, irrelevant. Cutoff, nothing to do with cutoff. Completeness, again, no, there's nothing as regards completeness. Rights and obligations, of course, that's the only one which you will consider here. Yeah, clear on this? Everyone clear? Yeah, clear, everyone? All right, so now Now, the next part to this question was that if you identify the assertion, so that is fair. Now, let's suppose you have identified the assertion, the rights and obligation, which the auditor is trying to verify. Now, the question arises, how will the auditor verify that? Yes or no? Of course, this is required to be verified, understood. But how will the auditor verify that? So, that is also a very, very important question, isn't it? So, how will that be done? Yeah. Now, in this case, auditor is verifying that whether the company owns or controls inventory which is physically lying with the company. Yeah. So how can you check that? By verifying the stock records. Because the yarn which is received from the customer must be having some identification in terms of the documents that must have been recorded in a separate manner. The underlying documents in respect of such type of yarn will be different from the one which is in respect of purchased yarn. So there are two types of yarn. Yes or no? So one which is purchased will have a purchase invoice. One which is received from the customer will not have a purchase invoice, will have some other documents. So those underlying documents, once those are checked, that is how auditor will get to know that yes, of course, this is the yarn which doesn't belong to the company. Yes or no? Of course, this listing will be obtained by the auditor because the company will provide the listing that this is the yarn which is received from the customer. And on a sample basis, on that particular listing, auditor can apply the audit procedures. Mean auditor can, on a sample basis, check the underlying documents. Understood? On a sample basis, auditor can check the underlying documents. Once that is done, auditor will get the clarity. Clear? Everyone clear? Yeah. So I'm just hoping that some of you who answered, I think, a lot of assertions pertaining to this. And some of the assertions which were not rights and obligations, I'm just hoping they are now clear. Yeah, clear. If you still have any questions, any doubts, please let me know. I think Priyanka also answered this. Rights and obligations. Great. Anyone else? Any more questions? No? Sure? Yeah, so shall we move? All right, so now after getting this clarity around various assertions which we have in respect of balance sheet items and P&L items, now the next step for us will be to get on to the balance sheet items and design the audit procedures to audit those balance sheet items. But while designing the audit procedures, every time we will have to think about the assertions. So we'll have to keep in mind that every audit procedure that we are thinking, which assertion we are trying to cover through that audit procedure. Okay, so that should be our approach. That should be our thought process. Clear? Now, before we really get on to this next step, wherein we plan to design the audit procedures, I'll just give you a broad overview of what this audit requires. Because while designing the audit procedures, I think it will help you quite a lot. Because if you look at this particular chapter, generally there is a thought process. Yeah. that this chapter is quite lengthy. Okay, it has got a lot of items, a lot of audit procedures. They are too technical. So do we need to mug up all of those audit procedures? So is that the thought process? Yes or no? Please confirm, everyone. Yeah. So do you have the same thoughts? Quickly, please confirm. Yeah. So is your understanding on the similar line that this is how you actually think about it? Quickly. Yes or no? Yeah. All right. So now let's try to understand about the audit. And this approach should help you in designing the audit procedures. Okay, so when it comes to the audit procedures or the audit, so basically few things that we need to check. First, of course, is accounting. Yes or no? So as an auditor, what do you go and check? Whether the accounting is appropriate or not. Correct? And how do you do that? You look at the accounting principles, the relevant accounting standard. So that's one thing. In fact, for each and every area, lot of accounting requirements that you'll have, if you ensure that, that is your audit procedure. Yes or no? Or you can say, without the knowledge of this accounting or the accounting standards, can you actually go and apply the audit procedures on the accounting requirements? The answer is no. Now, other than accounting, can you tell me what do you need while preparing the financial statements? Any thoughts from anyone? While preparing the financial statements, while presenting the financial statements, of course, first thing that you will need is the accounting, means the accounting standards. But can you also tell me, is there any other thing which you will need or which you will require a knowledge of for preparing or presenting the financial statements? Yes, anyone? Vishal says methods to use. Okay. Rehana says legal regulations. Very good. That's correct. So there are various laws and regulations. There are various laws and regulations which are relevant. So when you prepare the financial statements, just to give you an example for this, one very basic requirement is what? Schedule 3. Where does it come from? Companies Act. So that means over and above accounting standards, what will you need? Companies Act for preparation of the financial statements. So I'm looking at it from the management's point of view. Now, for an auditor, will that not be required? Of course, that will be required by the auditor also. So the auditor will also need this. Auditor will also require this. Okay, so the auditor will also require this. Knowledge of the relevant law or regulation, without which will he be able to complete the audit of the financial statements? The answer is no. Answer is no. So auditor will require the knowledge of relevant law or regulation. So that's the Second aspect. Third will be audit. For auditing, we have got various auditing standards. Similar to the accounting standards, we have got various auditing standards, yeah, which are called as essays. Which are called as essays. Yes or no? Yes, so for audit purposes, what do you need? Auditing standards. And all of these auditing standards need to be applied by the auditor. So is there any way that any of the auditing standard can be skipped? If that is relevant, that has to be applied. If that is irrelevant, of course, then it will not be applied. So therefore, whenever it comes to audit, please remember these 3 points always. Now let's try to understand as to how is this going to help you. Let's suppose, though we are going to discuss all the balance sheet P&L items, but let's suppose some of these things you don't revise, or maybe you forget any point. And now you are worried. So let's suppose there's a question in the exam and you are worried. How do you answer that? Because if you don't know the answer, so what is going to help you? So I think this approach can help you over there, wherein you can just think about these requirements in relation to that particular item, whether that is pertaining to balance sheet or P&L or maybe anything else in the financial statements. First of all, you can check what are the accounting requirements. So as an auditor, you need to verify, ensure that, examine that. So that will become your audit procedures. Look at the relevant laws and regulations. As an auditor, if you ensure that, that will also become your audit procedure. And then, of course, you would have come across a lot of auditing requirements. For example, balance confirmation, for example, obtaining the invoices, for example, obtaining the supporting documents, yeah, which is other than invoices, reviewing the agreements, performing inquiries with the management, taking representations. All of these are what? All of these are some of the audit procedures which are coming from the requirements of various auditing standards. Okay. So if you apply all of them, if you consider all of them, then what will happen? Tell me. You will be able to design the audit procedures. Yes or no? You will be able to design the audit procedures. Correct? Yeah. So this is the approach that you need to now pick up. Okay. So every time we'll be picking any item in the financial statements, we'll try to use the similar approach. Okay. Using this approach, we'll try to pick up an item and think through all the procedures which are in place, or you can say all the procedures which will be relevant. And alongside, we will also keep thinking that which assertion will be taken care of through that procedure, and whether at the end we have been able to cover all the assertions or not. It should not happen that we have thought about, say, 5 procedures, but maybe 3 assertions are still not covered. Okay, so both the ways we'll have to think about it. Fine, clear? Everyone clear on this? Any questions as around this? Then we'll move on to the procedures of various items of financial statement straight away. Yes, any questions if you have? No? Sure? All right, so now let's move further. Now, first of all, we'll pick up balance sheet line items. Okay. Now, for the balance sheet line items, two things you need to remember. Assertions which are going to apply to the balance sheet, number one. Number two, the approach that we just discussed means consideration of AS, consideration of laws and regulations, and consideration of auditing statements. Okay. So if you consider these two approaches, if you use these two approaches, then I'm sure you will be able to design a lot of audit procedures. Fine. Okay, now, first area in the balance sheet that we are going to cover is share capital. I think all of you are familiar with the share capital. So I don't need to discuss too much about the share capital, which is there in the balance sheet. Correct. And as regards the share capital, which is there in the balance sheet, this share capital again has got, sort of various requirements. One is your paid up share capital, one is your issued share capital, one is your authorized share capital. All could be different. Yeah. In relation to share capital, there's of course a presentation criteria. There's of course a disclosure requirement. But when it comes to the disclosure requirements in particular, then I think there are various legal requirements which need to be considered, without which you will not be able to complete the presentation or the preparation part of the share capital in the financial statements. Correct? Yeah. Without which you will not be able to do that. Okay. So now, as a next step, what we will do is we'll now pick up audit procedures related to various assertions in respect of share capital. Means share capital is now required to be audited. So we need to design the audit procedures. So while designing the audit procedures, we will consider various assertions which are there. Okay. First, existence. Now, this particular line item, share capital, is quite typical. It's quite easy, but at the same time quite typical. Means it's not like any asset or a liability. It's the share capital which the company has issued. So now, as regards the existence, as regards the completeness, as regards the valuation, collectively for these three, let's try to look at some audit procedures. Okay, so we'll look at some audit procedures in relation to these assertions. Fine. First, tally the period end share capital balance up to the previous year audited financial statements. So whenever you will pick up the number in the financial statement, you will always trace the balance, means that trace the opening balance to the previous year's financials which are signed. Yes or no? So how do you pick up your opening balances? Go and trace them to the audited set of financial statements. Correct? So that is one. In case there is no change during the year, let's suppose share capital has remained same. Obtain a written confirmation representation from the company secretary. Now, this is again a very, very common procedure. Company secretary is the one who takes care of all of these compliances in a company. So that's why a written confirmation that yes, no change has taken place. Yeah, that is something you'll obtain from the company secretary. And by doing this, what will happen? You will ensure completeness. At the same time, you will also be ensuring the valuation. Yes or no? In case there is any change. Now, generally, whenever share capital is changed, whether authorized share capital is changed, shares are issued or shares are bought back. So there is a requirement on the part of the company to comply with some of the requirements of Companies Act. And before doing that, company will need internal approvals. Internal approval means board approval will be there. Okay. So therefore, in such a case, it becomes important on the part of the company to check what? To check whether all of these are complying with the relevant regulatory requirement. Okay. Now, all of these things you will get to know from the board minutes. So as an auditor, you will go review the minutes of the board meeting, wherein all of these aspects would have been discussed. Of course, you'll go and check the relevant regulatory requirement, whether that has been taken care of by the company or not. Of course, you'll go check that. Yeah, but before that, internal approvals, the resolutions, means the minutes of the board meeting, you need to check. Okay, then moving further. In case of fresh issue made in the current year, check with the compliance of Companies Act. Okay, so the same thing will apply to issue, to the buyback, yeah, to change in authorized capital. So any of these things which could be there. Every time you need to check whether it is complying with the Companies Act or any other act or any other rule or regulation. In case it's a listed company, so some of the compliances related to SEBI need to be taken care of. Okay, yeah. Also obtain and verify copies of forms filed with Ministry of Corporate Affairs. Now, generally, whenever these changes are done, so some forms are required to be filed with the ROC, Registrar of Companies, that is MC. So as an auditor, what will you do? You will check whether those relevant forms have been filed, whether those have been filed on time or not. So you will go check that, correct? Similarly, if the shares are issued at a premium, now in this case, as we discussed that particularly for an item like share capital, a lot of legal requirements are in place. Okay, which is generally not the case for other items, which is generally not in the place for other items. So that's why every time whenever you will have this particular item in the balance sheet, you will have to get on to our second approach. And in case of second approach, the point related to rule and regulation you need to be aware of. Only then you will be able to give the specific answer. See, one of your audit procedure could be that check the relevant regulatory requirement in relation to, say, change in authorized capital, in relation to issue of shares at a premium, in relation to issue of shares during the year. So this is your generic requirement. Or you can say when you write down this procedure is not bad, but this is generic because in this case, the relevant law or the relevant requirement of the law you have not specified. So if you specify that, that will look better. Okay. In case the company has issued shares at a premium, that is at an amount in excess of nominal value of shares, whether for cash or otherwise. So the relevant section of the Companies Act, Section 52, it provides company shall transfer the amount received as a premium to security premium account and state for which purpose the amount in the question can be applied. So there's a share of rupees 10 issued at rupees 90. What does it mean? Rupees 80 is towards premium. So can this entire amount of rupees 90 be recorded under share capital? Can this entire amount be recorded under share capital? The answer is no. Rupees 80 has to go to security premium. Rupees 10 will go to share capital. Okay, so that's how it will be segregated. That's how it will be segregated. Okay. So now as an auditor, what do you need to check? You need to check whether this has been segregated or not. So that's going to be your first thing. Yes or no? Yeah. And if you can specify the section or the relevant requirement, that looks better. Okay. But in the exam, if let's suppose you don't remember, so do you need to worry? No. Just at least write whatever you remember, but don't quote wrong sections or the wrong regulatory requirement. Okay. Be generic if you are not aware of the specific requirement, but at least write something. Okay. That is very, very important. Okay. Now, similar to this, when it comes to the application of the share premium. Now, one is you have recorded the security premium. Now, this security premium, which is recorded in the financial statements, its usage is restricted. Means the company is not free to use this. Now, where does this restriction come from? Again, Companies Act. Yeah. So what is that restricted usage? It can be used towards issue of unissued shares of company to the members of company as fully paid bonus shares, in writing of preliminary expenses of the company, in writing of expenses of commission paid or discount allowed, in providing for premium payable on redemption of any redeemable preference shares or debentures, for the purchase of its own shares or other securities under section 68, means buyback. Okay, means the amount of security premium can be utilized by the company only for these purposes. So as an auditor, what do you need to check? One, whether there has been any change in the security premium after the shares were issued at a premium. If that has not changed, then of course it's not utilized. But if that has got reduced, you need to find out where was that used. It should have been used only for these purposes. So for doing this, you need to be aware of this. Understood? Yeah. So please remember, audit is actually not limited to audit. Audit is all about having knowledge on different domains. So if you don't have the knowledge of accounting, if you don't have the knowledge of relevant law or regulation, then of course your procedure will get very, very limited. Yes or no? Yeah. So your procedure will go down significantly. They will become very, very limited. Clear? Now, similarly, if let's suppose shares are issued at a discount. So here again, there's a regulation. Where does it come from? Because it's about the share capital. So that is going to be there in case of a company. So it comes from the requirements of Companies Act. Company shall not issue shares at a discount except in case of issue of sweat equity shares. Okay. Then of course, various regulations which are applicable, those have been discussed. Now, as an auditor, what do you need to check? Because now we are the auditor. Yeah. So as an auditor, what is going to be my audit procedure? So let's stick to that. One, movement in share capital during the year. Verify company has not issued any of its shares at a discount. How do you get to know about it? Minutes of the meeting. Okay. Minutes will be the best document to take care of some of these points. Yeah. Verify that the company has issued shares at a discount to its creditors when its debt is covered into shares in pursuance of any statutory resolution plan or debt restructuring scheme in accordance with the relevant regulation. Now, that is related to RBI or Banking Regulation Act. That's a separate point. Clear? Yeah. So this is the second point. So now, as an auditor, what is it that you are trying to check? Any movement. If the movement is there, why that change has come? And you can always go look at the minutes. So minutes will give you an indication. Yes, this change should have come, and this will be the possible reason. And if you get to know that this change is because of shares issued, shares bought back, issued at a premium, issued at a discount, then you will look at the relevant regulation also. Clear? You will ensure whether the relevant regulation was taken care of or not. Clear? Yeah. So this is how you can always design the audit procedures. Clear? Clear? Now, moving further. So if we continue on this share capital, now share capital can have a lot of aspects. Okay, so moving further, if let's suppose we talk about the disclosure requirements. Now this is again very, very important, and particularly when it comes to the share capital. Disclosure requirements are significant, but in this case, if let's suppose you happen to be the auditor and you have to write down the procedure. So there are two ways you can write down the procedure. One, you can just write this sentence. Ensure whether the disclosure requirements, forget this word following. Because if you don't know the disclosure requirement, then what will be your procedure? Ensure whether the disclosure requirements of Schedule 3 to the Companies Act have been complied with or not. Okay. So if you write this procedure is appropriate, but this is incomplete and quite generic. Now, what is going to be your second approach? When you are specific, and you are aware of the relevant regulation, okay, in which case you will put down the disclosure requirement, something like this. Yeah. So you'll say that ensure whether the share capital has been appropriately disclosed, and for disclosure, this criteria is given by the Schedule 3. And you can just put down the criteria. For each class of share capital of the preference shares, number of shares to be shares authorized, amount of shares authorized, number of shares issued, subscribed and fully paid, subscribed but not fully paid, par value per share, reconciliation of the shares outstanding at the beginning and at the end of the year, rights, preferences, restrictions attaching to each class of shares. Okay, shares in respect of each class in the company held by its holding company or its ultimate holding company. Shares in the company held by each shareholder holding more than 5% shares. Again, a very, very important disclosure. Yeah, shares which are reserved for issue under options and contracts or commitments. For a period of 5 years immediately preceding the date as at which balance sheet is prepared, what do you disclose? Aggregate number, class of shares allotted as fully paid up. Then aggregate number, class of shares allotted as fully paid up by way of bonus shares. So the first one is wherein the shares are issued through cash. Second, when issued through bonus shares. Or if at all there is any bought back or buyback. Yeah. Then the terms of any securities which are convertible, if convertible shares have been issued, means convertible instruments. If there are any calls unpaid, if there are any forfeited shares. Okay. So all of these disclosures you'll have to put down. All of these disclosures you'll have to put down. And that's it. Yeah. Clear on this? So I think this was about the audit procedures in relation to this line item share capital in the financial statements. There are a lot of other line items in the balance sheet as well as P&L which have not been touched upon by us in greater detail today, which we plan to cover in our subsequent sessions. Yeah, so of course, this is not something which is concluded today. A lot of these things are going to come, but our approach is going to be similar. And while you apply that approach, I would always suggest, particularly in respect of next items which are going to come up. Why? Because share capital, as I told you, is quite typical, which has very limited counting requirement, but more of regulatory requirements. But when it comes to the other items which are going to come up, for example, inventory, for example, PP, for example, any loans advance, therein you'll see application of all of those three: accounting, rules and regulations, as well as the auditing standards, quite a lot. Yeah, so that is something we plan to cover in the subsequent sessions. Okay, so I think with this, we can just conclude our discussion for today. Any questions, any doubts if you have? Great. So Prem has a question. He's asking, sir, how the questions are going to come? See, some of the questions will be around the audit procedures. For example, a particular item is there in the financial statements. Then you are required to design the audit procedures, considering some specific assertion. Yeah, specific to the assertions. Or one question which could be case scenario based. Remember that case scenario based? So that could also be asked. So these type of questions could be there. And we are also going to practice quite a lot in our subsequent sessions. So today we just, I think, broadly discussed about the assertions. Our focus was more on the assertions. Now our focus will be on the audit procedures of each and every item, considering each and every assertion. Okay. All right. Any more questions if you have? Sejal is asking, sir, do we need to learn all of these points? See, if you want to mug up, if you want to learn, I don't find that to be easy. And that's why I have told you that try to understand some of these points. Okay, audit is again not something which you need to learn. You need to just apply that practically. So just think about its practical application. But of course, when it comes to some of these legal requirements, laws and regulations, that for sure you'll have to remember. Okay, so if you believe no, you need to learn those legal requirements, then of course, at least some of those you need to remember, because only then you will be able to write down procedures around that. At least some of those. Then I think Palak Bain has a question. Yes, please go ahead. What's your question? Yes, Palak Bain. What's your question? All right. So I don't think there's any further question. Yeah, sure. I think Sejal is clear on this. All right. Then I think we can just close our discussion for today. All right. Yeah. So thanks everyone for your time and for this wonderful participation. And my request will be that before we meet next, just make sure that assertions, particularly that we have discussed, you revise that. Huh? Just go through that. That's very, very important. Huh? Otherwise, in the next session, you'll again be looking around those assertions. Yeah. So that's very, very important. Just try to revise that aspect for sure before we meet next. Okay. So thanks everyone. Thanks so much.
Thank you, Achal sir. And thank you, students. So students, today we have started our chapter number 5, Audit of Items of Financial Statements, which is a very important chapter. The weightage of this chapter is around 12% to 20%, which is huge. So do not leave this chapter. Understand this chapter. You will not find it difficult. Practice the question in writing. And do practice from model test paper and case scenario booklet. And so students, the students appearing for May attempt, tomorrow is the mock test paper series 2. So do appear for that who are appearing for May attempt. And before coming to the next class, do revise the chapter covered till now, because if you will pile up the things, it will become very difficult for you to cover up. So before coming to the next class, which is on Monday, do revise the chapter. And thank you, Achal sir.
Thanks. Thanks so much. Yes, sure. Please. Thanks. Okay.
Recording stopped.